Alrighty, welcome back to Weenie Trades. So in this video, I'm going to be giving a technical analysis for AMC, BlackBerry, and GameStop. So let's get right into it. What happened with AMC today? Well, AMC had an inside day. It's a pretty wide inside day, but what an inside day means is that today's highs and lows was within the range of yesterday's highs and lows. And technically it was high 72.62 of yesterday. And then the low of yesterday was that 36 that we talked about in the video. So today we had a pretty crazy range, but on the daily chart, it looks kind of really like we went nowhere. Of course, it's a red bar. AMC was printing minus 17% today. So if we zoom into a smaller time frame, I said, hey, if we flush that $62 a share, it's a straight shot down to 50. Well, there we go. We breached 50 and came all the way down. If we look even zoom in even tighter, AMC made a low, a lower high, and made a lower low on the day without a lot of follow through. What I mean was we have this support right here, right? 43, we bounce. We breach that support. Usually you'd expect a little bit more downside, but because we're a little bit extended into breaking support, it got a little bit of a bounce from short cover rallying. But because of that, the buyers actually took control and AMC started to really curl up. I even took some long trades just over $50 a share, and it was really an interesting move. I'm just day trading AMC as the volatility is way too much for me to risk overnight. Again, I want to keep reiterating, AMC, nothing has to happen. Nobody can guarantee that AMC will continue to squeeze. Nobody can guarantee that AMC will sell off. What I do want you to be careful of is just be prepared for the worst scenario. So where is AMC headed? Well, I kind of look at this 62 level and I stand by it. Bullish above 62, look for the breakout on AMC. And what is the point of no return on the downside? Well, AMC could be done if it starts to really break underneath $45 a share and puts in a lower high and lower low. That could be very dangerous, and AMC can really have a nasty flash crash, and the next support levels wouldn't be until all the way down to 30, maybe as low as 25. I don't think we'll go anywhere underneath 25, but on the upside, by the end of the week, by the way, underneath 25, I do not think we will not reach AMC underneath 25 by the end of the week. But if we break out over 62, we can see some higher prices. I would expect a little bit of selling, in the mid 80s, 85s, and then something like 90. AMC 100, if everybody's talking about AMC 100, AMC surely won't go past 100. Again, there's no guarantees in the market, but think about the sentiment. If everybody's bullish, it can't really happen. If people are scared, well, then it has a chance to continue higher. So diamond hands, paper hands, do what's best for you and your account. Just remember this too. At any given point, a stock can be the highest it'll ever be again or the lowest it'll ever be again. This $50 a share right now in AMC, this could be the highest AMC will ever be again. It's not likely. It may go higher. It may go lower. It also could be the lowest AMC will ever be. That's very unlikely, but it could be the lowest that AMC will ever be again if it continues a massive, massive squeeze. So that's just something to think about and prepare for the worst scenario. Hope for the best, but prepare for the worst. Anything can happen in this market. I've seen some nasty, nasty gap downs, and it can really hurt some people. AMC would be within the realm to potentially gap down 40%. Now, I'm not saying AMC is going to gap down 40%. I'm just preparing you for all sides. So let's get right into the BlackBerry technical analysis. BlackBerry had a very volatile trading day. BlackBerry gapped up massively. And if we look in the pre-market, got as high as $21.54. Then we got a massive open right at about $20 a share, and we just dumped. That means there's a lot of profit takers from people that had swing traded calls or something like that, or shares overnight. So BlackBerry dump. We got a nice good bear flag. Then we broke down. Then we put in a lower high, higher low. I've been talking about the equilibrium. If BlackBerry can really get above 18, I would say the squeeze has a chance. So $18 a share, look for then BlackBerry to move up to $20 a share. And if it's holding above $20 a share, it should continue the squeeze. We'll reevaluate at Weenie Trades Live. But BlackBerry, by the way it traded today, it did feel a little bit more bearish. It felt like there was a little bit more selling pressure as I was trading it today. So BlackBerry, just because of that, I'm looking at key flush points, and that's going to be 15. 15 opens up the trap door down to test 13, and underneath 13, the chances of a squeeze is very low because you need a trend change, many different trend changes and you need to go through many different equilibriums. You need to go through flag patterns to get through it, and it just decreases the chances. So if BlackBerry breaks 15, look out below. If it can get above 18 and 20, look for potentially higher prices, and we'll probably be trading it at Weenie Trades live. So BlackBerry, just remember this. We had a nice good wedge break on the daily over 958. Now we've ran up massively since then, over 109%. There will be some people that may take some profits from those that took the technical entry over about 950. Otherwise, remember this. There's a lot of pump and dumps that I've seen in the past, and generally whenever the first pump, that's the biggest one, then the next pumps are always littler, and they get people hoping for the next pump, but it leaves them holding the bag as it tends to sell off and do exactly what we did here. Pump, dump, zigzag, pump, dump. I bet we zigzag. Maybe we pump a little bit a few months after it's just gone sideways to nowhere for a while and make another lower high and then pump and dump. This is one of the most common patterns that I see all the time. Now, I'm not saying BlackBerry is a pump and dump. I'm just saying be prepared in case BlackBerry is a pump and dump, because I care about you and your account more than just telling you, oh yeah, BlackBerry's going to go to the moon. It's a lot more complicated than that. There's a lot more players and a lot more things going on behind the scenes, and there's no guarantees in the market if I haven't stressed that enough. So let's get on to GME. GameStop has been a little bit of a laggard to AMC. So what I mean by that is AMC squeezes, and then a little bit later, maybe a few minutes later, GameStop squeezes. So this is AMC, and then after that, GameStop starts to squeeze. But GameStop's a little bit more relatively weak. It seems like there's a little bit more profit takers, probably because there's a few bag holders over here that wish they could have gotten out, that bought in the upper range, and they didn't stop out. Don't be afraid to take the loss. You can always get back in, or you can put it in something else that might be a better chance of making you money. So you just feel like you don't have to be trapped into these stocks. But GameStop, right here, we kind of held this higher low trend. So that we created a higher low trend. Can we pop and break out over that, 290, 295 area? Or if we start to get beneath, 250 and 240, we could be starting to roll over and test this trend line right about here. And that would be about 209. And that represents this gap. It represents a higher low and a general area of support. So if GameStop gets beneath 240, 245, 250, look for GameStop to flush down to 209. If GameStop starts getting above, call it 290, I'll say 290, that should be the pop for the upside on GameStop. Be prepared for both scenarios. That $300 a share is really strong resistance. I bet there's a ton of bets on whether GameStop hits 300 again. We'll see which one of those bets decides to win. So that's my recap and the analysis for AMC, BlackBerry, and GameStop. In terms of my trading today, it was just a normal green day. Just an average day trading day. Small little 3-hour green day. We've had nice, good 2 green weeks straight of day trading profits. Let's get going. Let's get ready for Friday, for a nice chill Friday. Be on our toes though, in case there's some massive selling. There can be, when selling comes, it hits you hard and hits you fast, and you've got to have your goggles on because it's going to get a little bit dirty. Thanks for tuning in. See ya.